Good morning to all my friends and viewer, small YouTuber. Welcome to my channel. Uh, 4 days ago, I discussed about the money, credit, and banking. And the last topic I mentioned is the rationale of the saving decision. But also I said that I will continue the topic, the rationale of the saving decision. And right now, let's continue our my discussion about the rationale of the saving decision. The rights of the owner. In connection with the above, ownership in general is treated in the Civil Code of the Philippines will be taken up for their possible educational value. 2. With Article 427, ownership may be exercised over things or rights. Article 428, the owner has the right to enjoy and dispose of a thing without other limitation than those established by law. The owner has also right of action against the holder and possessor of the thing in order to recover it. Article 429, the owner or lawful possessor of a thing has the right to exclude any person from the enjoyment and disposal thereof. For this purpose, he may use such force as may be reasonably necessary to repel or prevent of actual or threatened unlawful physical invasion or usurpation of his property. Two other equally important provisions of the Civil Code of the Philippines are as follows. Article 431, the owner of a thing cannot make use thereof in such manner as to injure the right of a third person. Article 432, the owner of a thing has no right to prohibit the interference of another with the same if the interference is necessary to avert an imminent danger and the threatened damage compared to the damage arising up to the owner for the interference is much greater. The owner may demand from a person benefited indemnity for the damage to him. Good shout out to Anne Marisiga. Well, good morning to you. Aforesaid provision are practically worded in a simple and comprehensive manner for the benefits even by those who are not legally inclined. Hence, there is no reason for further elucidation. Going back to the third element of the concept of the household wealth, an illustration quoted below will suffice. To wit, O'Bannon at 1970, the most familiar example of family may be owned its house at the same time has been outstanding debt or mortgage against its equal to substantial portion of the market value of the house. The contribution of the house, the family's wealth is the difference between the value of the house and the value of the mortgage, the family equity in the house. Incidentally, on the context laid down above, wealth may either be positive or negative depending on whether saving is negative or positive. If wealth increases, it is said to be positive because of positive saving. On the other hand, if wealth decreases, it is said to be negative because of negative saving. This saving equation. The effects of saving on a person's wealth as earlier presented can be best illustrated on the following identity equation. Asset equals liabilities equals wealth. Income consumption equals savings. Ayun. Asset minus liability equals wealth. Income minus consumption equals saving. Consumption plus saving equals income. Saving equals wealth. The first equation indicated above is known as the balance sheet. Thus, ideally, asset must be greater than liabilities, and this will mean positive wealth. However, it's not a remote possibility that assets may be less than liabilities, and this will mean negative wealth. Good morning. However, it's not a remote possibility the asset may be less than liabilities, and this will mean negative wealth. By and large, an individual may be described as net creditor if wealth is positive, if on the opposite he is referred to as net debtor. The second and third equation are substantially the same with the twist known as the saving identity. The twist in the saving identity equation exemplifies the fact that the consumption and saving are the two alternative functions of income. Naturally, when one's try explaining some consumption, it must invariably talking also to the other side of the same coin, which is in saving. The last equation is referred to as the accumulation identity. It provides the tie-up between the stock variable assets, liabilities, and wealth, and flow variables, income, consumption, and saving. The stock variables are values used of a point in time, while the flow variables are values used over a period of time. Hence, the accumulation identity expresses the idea that during any given period of time, saving equals wealth. The sign simply connotes a net change in wealth. If one is curious, this is net change in wealth in the same as the net saving or income balance, which again may positive or negative depending upon the circumstances. Effects on wealth. As earlier stated, positive saving increases wealth. Said increases may be effective in three ways depending upon the manner of utilizing the income balance of positive saving, such as number one, obtaining real or financial asset, two, settling or retiring existing debt, and three, retaining or accumulating money, cash. Now, if saving is negative, it reverses the whole idea enunciated above. Consumption is sustained in any of the following alternatives. One, borrowing to sustain deficit is spending. Two, utilizing retained earnings or past accumulated saving. And three, transforming real uh, CR financial assets into cash. Clearly, then the consumption must not be totally dependent upon income or revenue. Reason for saving. The motivation for saving are numerous. As such, the enumeration herein cited are not executive or inclusive in themselves, be that as it may. Two things are factually undeniable, namely saving is deliberate plan activity. And saving is an unplanned activity or product of chance and unexpected event. This fact is easily demonstrated by example given below. More significantly, the attempts to hypothesize the saving decision will be bear out this point. The specific motives for saving are as follow. Number one, to finance the needs of old age. The rationale for this is that no one can continuously work to earn his living for the rest of his life. Sooner or later, he has to stop working, so he must save while working. Two, to give insurance against the contingency of being unemployed or possible loss of employment because of ill health or incident. Only those who only those with bahala na or suicidal or fanatical attitude will leave the fortune unchartered and unprovided. Number three, to give protection for the family, the bread earner must take in an insurance policy, which is another form of saving. The cash surrender value of the policy through the years accumulated out of premium payments in the saving contemplated. Of course, the provident aspect of insurance policy is the face value of the policy given to the family as beneficiary of the insured in case of the latter's untimely death. Number 4, to enjoy fully retirement period in comfort and leisure. This is especially true for those who quit or retire optional for employment at early age. 5, to earn interest or additional income besides safety and convenience. If one deposits a saving in the bank, he gets an interest. In today's financial parlance, it is called the expected yield. 6, to save because there is no other alternative but to save. This may be termed for saving. Truly, there are those who have more income than what they could spend for their needs. Hence, the excess or surplus is clearly going to be saved. The item from number 1 of the number 5 are planned as against the number 6 item which is unplanned. World's thriftiest saver. Based on 1990 records of the International Savings Banks Institute, the Japanese were the thriftiest savers in the world with an average of $45,118 bank per head of the population. This is an increase of 10% over their saving in 1989. It is noted that the value of the yen against the US dollar increased in 1990. Switzerland ranked second within $19,971 of saving per head in 1990. The third was Denmark with $18,405 per head. The other top 10 were France, $7,650, West Germany, $17,042, Australia, $16,639, Norway, $15,196, Belgium, $15,111, Singapore, $14,492, Netherlands, $14,282. The record of the top 10 of the greatest savers of the world were unchanged from 1989. US per head saving with $4,201 in 1990. Canada posted $6,541. The bottom of the list included Bolivia with $21 and Ethiopia with $22 savings per head. Socioeconomic factor in the saving decision. The attempts to hypothesize the behavioral aspect of the saving decision may be classified into objective and subjective factors. The objective factors are the current hypothesis, life cycle hypothesis, and the concept of expected yield. The subjective personal factor may be due to taste and preference brought about the difference in social, economic, political, religious, cultural, educational, and upbringing of individual savers, idiosyncrasy, and the like. Current income hypothesis. The particular hypothesis is attributed to John Maynard Keynes on economics of the highest order. According to Keynes, saving and consumption are complementary to each other. They are both alternative uses of income. The previous equation served to portray this idea. Income minus consumption equals saving. Consumption plus saving equals income. The relationship of income, consumption, and saving may be reduced to one important question: how do people decide how to divide their income between consumption and saving? That is the question. Keynes had already answered to this question, which is multi-faceted as cited below. Keynes thought this is largely a matter of habit and necessity. People acquire a certain standard of living and spend what is necessary to maintain it. The rest of their income, if there is any left, they are saved without much regard to rate of interest they can earn. The amount spent at a given level of income and amount resulting from combination of psychological and social forces. Keynes called the propensity to consume, since this is among excuse me, important factor in mathematical expressions. It is also called the consumption function. What is saved is merely what is not spent on consumer goods. In fraction or percentages, it is the complement of consumption. That is, if consumption is 4 feet or 80% of income, saving will be 1/5 or 20% of income. Now, we come to critical part of the Keynesian doctrine. How much those in any income bracket will save heavily varies with the size of their income. Poor people have to spend all they make. They have little or nothing. Rich people have a much bigger surplus, consequently their saving propensity runs higher. This is observation is a record as in accord with common sense as being corroborated by statistics. Keynes drew important inferences from its bearing on his main theory. One inference is that is a society where there is a little change in total income or its distribution, there is like to be a little change in total saving will be stable also. This conclusion conceals assumption which may be contrary to reality. For example, that nothing ever causes a change in spending for consumer goods except a change in the size of income. By the aid of this conclusion, he was able to introduce into his theory intricate marginal calculation of the traditional sort. What does determine changes in saving he held depends on the changes in propensity to consume resulting from marginal increments to income. In a nutshell, allow income earners save a smaller portion of his income than a high income earners. Technically, it would mean that saving is negative at low levels of income and positive at higher level of income. Permanent income hypothesis. This is hypothesis content that consumption does not depend on current income but on permanent income. The term permanent income is construed to mean that level of income one has come to expect as his normal income. Nevertheless, the actual income may fluctuate around the permanent income because of some chance or transitory factors such as sickness or health, ill health, or sudden loss of employment will cause income to be less than uh, permanent income. In a similar fashion, a raise in salary or an expected inheritance or gift of winning a first prize ticket of the Philippines charity sweepstakes will cause income to be more than permanent income. So far, the analysis revealed that the saving decision is partly a planned activity and partly a product of chance variation in income. Life cycle hypothesis. This particular hypothesis is founded on the maximization of utility derived from the consumption of goods and services. The realization of this objective would require a lifetime scheme for consumption expenditure on the basis of expected lifetime income. The strategy is to save in period or surplus income in order to maintain the same approximately levels of consumption expenditure in periods of deficient income. Expected yield. This term is described as the interest rate implicit in the relationship between the stream of future payments and the market price of the asset that provides those payments. Expected yield may also refer to the ratio of the expected future payments to the current cost of the asset. This definition of expected yield are suggestive of the fact that saving is made in variety of forms created by the financial system. These forms are called financial instrument. Such instrument in the parlance of the financial and business community and financial assets which are form of wealth. There is therefore the transformation of the money that it saved into financial instrument. Although money itself is considered a special type of financial instrument, needless to say, the decision as to the amount of types of financial instruments to become accumulated or acquired will depend greatly on the expected yield. Finally, the higher the expected yields, the greater the incentive for saving in the forms of financial instrument. Factors that affects choices among financial instruments. Some of the most common financial instruments that are usually available in the financial market are as follows: stock, bonds, CBCIs, commercial papers, promissory notes, repurchase agreements, certificate of participation, interbank call loans, certificates of assignment, banker acceptances, and the like. Which among these financial instruments will form part of the asset holder portfolio? The answer will depend on the following consideration: credit, risk, liquidity, the possibility of capital gains or capital losses, the risk of inflation, differential taxation, and of course the expected yield. Credit risk. Considering that a financial instrument is claimed to a stream of the future payments, there arises the uncertainty or risk that the contractual payments may not be forthcoming as planned. Verily, it is a matter or question of getting paid in full, in part, or not at all. Hence, the greater the risk, the higher the yield, and the lower the risk, the smaller the yield. Liquidity. This is the synonymous to cash. Therefore, if a financial instrument is said to be liquid, it can be disposed of or converted into cash without much appreciable uh, loss in value, and within the shortest possible time. The financial instrument is considered liquid only if it is a smaller yield, and as such we did only it is a smaller yield and such with relatively lower risk. Speculation. The term speculation is likened to gambling. Purchasing a financial instrument, those with variable yield or income, at lower price and selling the same at higher price to realize a sizable gain or revenue in the process. This is accomplished when the price changes. A good example is stock buying or selling as the case may be. Inflation. The term is always associated with rising prices. Hence, in order to beat inflation, the expected yield of financial instrument must always be greater than the rate of inflation. Differential taxation. This can be best illustrated by considering two types of financial instrument. One whose yield is tax exempted, being issued by the government, and the other one whose yield is not tax exempt, being issued by private financial institution or private corporate borrowing entity. Thus, taking other factor constant, the former is preferred to the latter. Other consideration. In ending this chapter, it may be mentioned that the demand for particular types of financial instrument as form in which wealth may be accumulated may likewise be dependent upon their marketable negotiability, convertibility, or liquidity, divisibility, diversification, and the like. Now, let's go to our question. Question for review and discussion. You can answer this in your paper or you can comment in this live stream. Question for review and discussion. Number 1, explain the nature of wealth. Number 2, explain the question of balance sheet identity. Number 3, if current consumption is greater than current income, how could this be sustained? 4, why do we save? It is good to save money in the bank during prolonged inflation. 5, give one factor in saving decision, explain it. 6, what is financial instrument? 7, name at least 6 financial instrument. And last, number 8 question, name at least 4 consideration in the choice for financial instrument forming a part of so-called portfolio. This is the end of my topic, the rationale of the saving decision, money, credit, and banking. Let's go to the next topic, the payment system and financial intermediation. All right. In the beginning, there was no money. It is important was not felt then because both society and the economy were primitive. People were able to produce only what they could consume. Later on, as production yielded more and more surplus value, they realized that they enjoy mutual benefits by exchanging their products and services. This is a barter, however, the barter system had several limitations. For instance, double coincidence seldom occurred. This means a man who wanted to exchange his horse with a cow had to look for another man who wanted to exchange his cow with a horse. Another, it was difficult to measure the value of different products with one another. For example, what is the value of 1 kilo of rice in terms of eggs, tomatoes, or meat? That is the question. Clearly, a barter system cannot facilitate the exchange of goods and services among the members of society. Such particular problem was even more difficult in the international exchange of goods and services. To eliminate the shortcomings of the barter system, man invented money. This has accelerated the exchange of goods and services not only within the countries but among nations. Moreover, the value or prices of goods and services can be determined by means of money. With such advantages brought about by the use of money, both domestic and international trade have expanded and have been conducted in more efficient manner. With the growth of the modern economy, financial institutions have also increased and have become more sophisticated in their operation. Their principal job is financial intermediation, that is, they act as middlemen between buyers and sellers of financial instruments like stocks, bonds, treasury bills, corporate notes, loan, etc. Such role of financial institution has tremendous impact of the economy. Financial institutions mobilize people saving which are used by businessmen for investment. To make the payment system more efficient, the electronic money has been developed. Plastic cards are used instead of cash money or checks. A faceless machine serves customer and no longer a pretty girl with pleasing smile. There has been a tendency among the highly developed countries to move towards a cashless society to reduce the cost of financial operation and to maximize the efficiency of the payment system, which play a vital role in economic development. This chapter briefly presents general information on topics such as payment system, clearing of checks at the central bank, bouncing check, and financial intermediation, money market, among others. Payment system defined. The payment system is being referred to as the set of institutional arrangement through which purchasing power is transferred from one participant in an exchange to another, that is from the buyers to the seller. Simply, the payment system is the set of institutional arrangement for the transfer of money from person to person frequently among people who are widely separated geographically, often in different countries using different money. Such definition suggests that the transfers of and goods and services from one person to another is affected not by the direct use of money but the temporary utilization of other means of payment system. Afterwards, money is transferred from the buyer, the seller via the banking institution. Such sophisticated means of payment is usually used in transactions which involve huge amount of money. These are the checks. Composition of money supply. The composition of our money supply is classified into categories. 1. Currency, notes and coins issued by the central bank. 2. Demand deposit money, withdrawable checks. It is commented that above it but a limited concept of the money supply, which is treated by the symbol M as such. The additional concept of money supply are designated by the following symbol: M2, M3, M4, and M5. Their components are as follows: M2, M1 plus saving and time deposits at commercial banks, except for large negotiable certificate of deposit. M3, M2 plus deposit of mutual saving banks and saving and loan association. M4, M2 plus large CDs of commercial banks. N5, M3 plus large CD at commercial bank. Payments under Philippine law. The rule to be observed regarding the use of other means of payment than the legal tender money, that is the currency issue and circulating in accordance with provision of the Central Bank Act, is found in Article 1249 of the Civil Code of the Philippines, to wit: the payments of debts in money shall be made in the currency stipulated, and it is not possible to deliver such currency than in the currency which is legal tender in the Philippines. The delivery of promissory notes payable to under or bills of exchange or other mercantile documents shall produce the effects of payment only when they have been cash or when through the faults of creditor they have been impaired. In the meantime, the action derived from the original obligation shall be held in abeyance, completing the above provision in Section 63, the Central Bank Act as amended to it. Checks representing deposit money do not have legal tender power, and the acceptance in payment of debts for both public and private is as the option of the creditor, provided, however, that a check which has been cleared and credited to the account of the creditor shall be equivalent to delivery to the creditor of cash in amount of equal to the amount credited to his account. As expressed in the above provision, the effectiveness of checks and other mercantile documents or bill of exchange as means of payment will depend upon in the encashment of such substitutes for money, or when the amount appearing on the instrument is properly credited to the account of the creditor seller. In the case of a check, briefly stated, payment through the check is only payment when the same is actually cash or the check has been cleared and credited to the account of the creditor. As a consequence, money purchasing power is transferred. Incidentally, for the guidance and information of the depositor, rules as to the number of days necessary for the clearing of checks are conspicuously posted within the cash department of every banking institution doing business in the Philippines. All right. Clearing of checks. The clearing of checks is a central bank responsibility. This can be gathered from provision of Section 107 of the Central Bank Act, to wit: the central bank shall establish nationwide facilities to provide interbank clearing at no cost to the banks. The deposit reserves maintained by the banks in the central banks in accordance with the provision of Section 100, shall serve as a basis for the clearing of checks and the settlements of interbank balances subject to such rules and regulation as the Monetary Board may issue with respect to such operation. Objectives of Clearinghouse. With the establishment of the Philippines Clearinghouse Corporation, PCHC, Philippine Clearinghouse Corporation, and the subsequent issuance of Magnetic Ink Character Recognition MICR encoded checks, it is expected that the clearing days for checks could greatly be reduced. The efficiency of clearinghouse depends on the promptness and precision of its clearing process. A prolonged period of collection or delay in effecting collection denies the certainty of earnings for the depository bank. Hence, the birth of the PCHC MICR encoded checks made fully operational in Metro Manila on January 1, 1980. Naturally, the automatic checks clearing of the PCHC is a greater improvement against the mutual clearing of checks. It is doubly interesting to note that the purpose for which of the Philippines Clearinghouse Corporation (PCHC) is formed has something to do or made reference with the above quoted provision of Section 107 of the Central Bank Act. The articles or incorporation of the said corporation provides that the purpose of its formation is to provide, maintain, and render an effective, convenient, efficient, economical, and relevant exchange and facilitate service limited to check processing and sorting by way of assisting member banks and entities in clearing checks and other clearing items as defined in existing and in future Central Bank of the Philippines circular memoranda, circular letters, rules and regulation and policy in pursuance to the provision of Section 107 of Republic Act number 265, otherwise known as the Central Bank Act as amended to carry on very branch of related business usually transacted in connection therewith to do with everything necessary suitable use or advisable to the accomplishment of said purpose of which shall any time appear to be conducted to expedient for benefit or said corporation in connection therewith and to do any lawful act with necessary or proper to accomplish the purpose of the corporation. Clearing procedures. The the clearing of checks within the banks in Metro Manila is done by the Philippines Clearinghouse Corporation. This is a private firm which hold offices at the ground floor of the Central Bank of the Philippines. Check are cleared by computer machine. In the case of checks between Manila and provinces, clearing is done by Manila Clearing Regional Unit of the Central Bank. Checks within the provinces are cleared by the respective central bank's regional clearing units. Such clearing of the check is done by manual method. At the Manila Clearing Regional Units, there are boxes for each bank. For example, there is an PNB box. All the PNB checks which have been encashed in other banks are placed by a representative of said banks in the PNB box. This means that PNB has to pay the banks which cash the checks, BPI, PBC, for example. In the same manner, the PNB representative places the checks of the other banks in the respective boxes. Such checks are payable to PNB because it has cashed said checks. Thus, PNB claims payment from the other banks where the checks came from. Payment of the checks are done through the offsetting process. They are recorded in the clearing office statement of each bank, which indicates the debit credit balance due. Clearing of checks is held every day at 4 a.m. p.m. 4 o'clock afternoon. Bouncing check. The law that penalize that making a drawing or drawing and issuance of a check without sufficient funds or credit and for other purposes is Batas Pambansa Bill in 22 Section 1 of the said law state that any person who make or draw and issue any checks to apply on account or for value, knowing at the times of issue that he does not now have sufficient fund in or credit with the drawing bank for the payment of such check is full upon in presentment, which check is subsequently dishonored by this drawing bank for insufficiency or funds or credit or would have been dishonored for the same reason as not the drawer without any valid reason, order the bank to stop payment shall be punished by imprisonment of not less than 30 days but not more than 1 year, or by fine of not less than but not more than double the amount of the check, which fine shall in no case exceed 200,000 pesos, or both such fines and imprisonment at the discretion of the court. The same penalty shall be imposed upon any person who having sufficient funds in or credit with the drawing bank when he makes or draw an issue of check shall fail to keep sufficient funds or to maintain a credit to cover the full amount of the check is presented within a period of 90 days from the date appearing thereon, for which reason is dishonored by the drawing bank. Whereas the check is drawn by corporation, company, or entity, the person or persons who actually signs the check in behalf of such drawer shall be liable to under this act. Efficiency of the payment system. It must be borne in mind that in effecting is a given transfer of goods and services from one person to another, certain costs are involved. In other words, effecting payment is not costly activity. Basically, the cost of the payments mechanism are the following: the cost of producing the supply of coin and paper currency, the cost of distributing and storing currency, and the cost of clearing checks. Chandler, 1978. Precisely because of the cost in effecting a given value of payments, the economists are interested in the efficiency of the payment system, as may be implied in the cost of the payment mechanism. Scarce resources are being utilized which have alternative uses like labor and capital. Therefore, the lesser the labor and capital being devoted in effecting the transfer of purchasing power, the greater the efficiency of the payments mechanism. This is so because it would mean that there could be more labor and capital available for productive endeavors. Bannon, 1972, and this is a good for economic growth. Future payment system. In highly developed industrial country like that of the United States, there has been talk about the possibility of a checkless society, cashless society, and electronic money emerging in a too distant future at all in the name of making payments mechanism very, very efficient that believes based their projection on the following facts. Chandler, 1978. Number one, the barter system of exchange gave way to the use of coin or paper currency. Number two, uh, the coin or paper currency in turn gradually gave way to the checking deposit. And lastly, number three, the advancement of computer technology and the proliferation of credit cards usage. Again, this is the believers based on their projection on the following facts. Of course, the Philippines has gone through the stages enumerated above, however not as sophisticated and advanced as in the United States with respect to computer technology and credit card usage. Nevertheless, the trends of pathways are there to cross. The evolutionary stages of the payment system, if taken an indicator, leads ultimately to crystallization of EMTS, electronic money transfer system. The mechanics of the EMTS are still quite speculative. Fortunately, some leading authorities on the subject foresee the ever increasing use of computers on this regards takes discerning perusal of the following. Chandler, 1978. Excuse me. Each economic unit in the society will have an account through which it can uh, instantaneously effect funds transferred to any other member of the system. The EMTS will consist of a nationwide computer network which keeps track of individual credits and debits of trending occurs in the economy business. Firms and government offices will tie into the EMTS network using their own computers, while private individual means of access to the system will be a plastic identification card quite similar to today's credit cards. Every retail establishment will have one or more online terminals which have the capacity to read identification cards and transmit sales and payment information to the local EMTS computer center. Indeed, the eventuality of an electronic payments network would thereby cause the re-evaluation of such concepts like money banking and the financial system. Towards a cashless society, employees and paperwork had been reduced through the introduction of automated method. This has likewise improved the efficiency and reduced the cost of internal and interbank operation. However, such computerized technique require customer to play an electronic game. This means plastic card will be used instead of cash or check, and a faceless machine will serve the customer no longer a pretty girl with pleasing smile. There are now efforts, especially among highly developed countries like United States, Japan, and those in Western Europe, to reduce the use of cash in checks due to the high cost involved in printing and distributing the bills. The greatest contribution is the payment system in recent years has been the increasing use of credit and payment cards. There are three kinds of these plastic cards. Bank credit card. This is usually carries a ceiling on the total outstanding amount and offer the cardholder an extended credit facility by allowing him to defer payment of part of balance due. Travel entertainment card. This is sometimes called charge card. The holder normally pays an annual fee and carries no expenditure limit, but it does not offer extended credit as account has to be settled in full every month. In-house account card. This is issued by retailers and other organizations to customers to enable them to settle their purchase in one full soup at the end of the month. Soup, soup, SWOP. Financial intermediation. It may be said that the heart and soul of financial intermediary is financial intermediation. The essence of its existence. A financial intermediary is institutions such as commercial banks of saving, bank, a pension fund, or insurance company that issues claims against itself, acquired by ultimate lenders and uses to proceed acquire financial claims against others, the ultimate borrowers, Chandler, 1978. Another definition of the term state that is actually borrowed from one group in society who are often happy to trust financial intermediary, whereas they would not trust those to whom the intermediary lends and lends to another, thus putting itself at risk should some of the loans be defaulted. Last but not the least, Section 2-D of the General Banking Act states that financial intermediaries shall mean person or entities whose principal function include the lending, investing, or placement of funds or evidences of indebtedness or equity deposited with them, acquired by them, or otherwise coursed through them, either for their own or account or for the account of others. Basically, a financial intermediary may classify into bank and non-bank financial institution. However, it must be principally engaged in the borrowing and lending of funds, or borrowing and lending are facilitated and evidenced by the so-called financial instrument. All right. Good morning to all my viewers and my friends and small YouTubers. You can share these live streams to the community. Okay, all right. Transmutation of asset. If the essence of financial intermediary is financial intermediation, the essence of financial intermediation is the transmutation of assets. O'Bannon et al. 1972, the concept of transmutation of assets gives the proper perspective of why a surplus spending unit, creditor or lender or saver or depositor is unwilling to extend or give credits to a deficit spending unit. Borrower debtors are ultimate user of funds and extend and trust his funds to financial intermediaries such as commercial bank or saving and mortgage bank. Such financial intermediary in all probabilities may be extended credit or funds to the very same borrower being denied of said accommodation by the original depositor, as aptly described hereunder. O'Bannon et al. 1972. Transmutation means literally the transformation of something from one nature, substance, or form into another. The financial intermediary accepts claim on ultimate borrowers that ultimate lenders would not lenders with characteristics that ultimate borrowers could not duplicate. The intermediary does not create real wealth but merely changes the form of the claims on real wealth held by the asset holder. In this act of transmutation, the financial intermediary creates an asset form with a unique characteristic. Advantages of economic of scale. Even without Presidential Decree number 1738 declaring the banking industry as indispensable to the growth of national economy and for the other purposes, banking institutions are here to stay together with other financial intermediaries. The stability and strength of financial intermediaries may be due to the following: Chandler et al. 1978. The ability of financial intermediaries to survive and prosper is derived from several types of economies of specialization and scale. An intermediary operating with a large pool of funds can command expert it with various functions reap the increased productivity and lower costs resulting from high degree of specialization, employ efficient machinery and equipment such as computers, and often succeeded in purchasing services at prices lower than those charged to individual investors. For example, it can gather and analyze information at low cost per unit by spreading the total cost over large volume of assets. Some intermediaries claims that they make better decisions than would be made the ultimately owners of savings. This is undoubtedly true in many cases, but even where it's not true, the intermediary cannot most likely gather and analyze data at lower cost than could the individual owner. Also will be discussed later in more details, intermediaries can achieve lower transaction costs in buying, holding, and selling direct securities. This proceeding source of economy are highly relevant, but we shall stress in the importance of the law of large number. This law is basic to both diversification of assets and principle of offsetting receipt and withdrawal of funds. Now let's go to the question for review and discussion. You can answer this in your paper and you can answer this in comment section. All right. Question for review and discussion. Number one. Number one, define payment system. Number two, what is the composition of the money supply? Number three, what are the objectives of the clearinghouse? Number four, what is your idea of an efficient payment system? Five, evaluate our own payment system. Number six, define financial intermediary. Seven, explain the concept of financial intermediation. Eight, state the meaning of transmutation asset. 9. Is there such thing as cashless society? 10. Is there such thing as electronic money? 11. Reason for the staying power of financial intermediary. Number 12. Excuse me. Explain and illustrate the clearing procedure at the central bank. And lastly, question number 13. What are the kinds of credit cards? Explain 1. All right. Now, let's go to the annex. Annex Circular Number 580, September 19, 1977. Subject Amendment of Circular Number 317, Series of 1970, and Circular Number 432, Series of 1974. Section 1. Time and place of exchanges. The clearing of checks, bills, and other demands item contemplated in this circular shall be conducted in the premises of the central bank on the ground floor of the central bank building and such other places and regional clearing center which the central bank may designate. The hour for making such exchanges shall be at 4 p.m. on each business day as well as on all local holidays in the clearing center and or at such other times which may be fixed by central bank. Section 2. Settling clerks. The head of office of each bank, institute, or entity, together with all its branches within designated clearing areas, Annex 1 shall be considered as one unit and shall be represented by one or more but not exceeding 6 competent clerks representatives to deliver and receive the items to be exchanged, the facsimile and signature and NBI clearances of representative shall be presented for administration in the clearing office or regional clearing units. Section 3. Items for clearing. All checks and documents payable on demand and drawn against a bank, branch, institution, or entity or law to clear may be exchanged through the clearing offices in Manila and the regional clearing units in regional center designated by central bank as evidence of the channel through which they were renegotiated. All items to be exchanged shall be properly endorsed and guaranteed before being sent to the clearing office unit and shall be clear the name of the bank, branch, institution, or entity to which they belong. Likewise, they shall be impressed by the sending bank, branch, institution, or entity with a special stamp to the effect that they have been cleared through the clearing facilities of the Central Bank of the Philippines. The clearing office units of the Central Bank of the Philippines shall in no way be responsible for any flaws or defects in the items or for any irregularity whatsoever in any of their futures. Mature Philippines Treasury bills which may be presented by clearing shall impress with a special stamp with the word paid and the name of the bank, branch, institution, entity, and the date of payment. The treasury bills shall be sealed in separate envelopes, properly stamped in bold letters. Treasury bills with the machine tape listening the serial number and corresponding amounts. The total of fees shall be included as a debit against the central banks of the Philippines. Treasury bills for return may be sent through clearing following the procedure stated under Section 4 hereunder. Section 4 Clearing Procedure A. Procedure for regular clearing. Each bank's branch institution or entity through its representative shall deliver the representative demand in sealed envelopes made out of separately against the other bank's branches, institution, or entities allowed to clear the total of each demand shall be listed in certified shall be submitted to the Chief Clearing Office in Manila or the Regional Clearing Officer in the Regional Clearing Center. The original shall be retained and shall be the basis of the settlement of clearing balances in the respective deposit accounts with the central bank. The duplicate duly authenticated by the Chief Clearing Office or the Regional Clearing Officer concerned shall be returned to the bank branch institution or entity concerned through their clearing representative. The duplicate shall be the basis of each bank, institution, or entity to be taking up corresponding entity in their respective books of the accounts of the date clearing. For out-of-town clearing, the clearing office statement clearing from number 4-A shall be preferred in quadruplicate for authentication by clearing officer who retains one copy. The third copy shall be returned to the sending bank, branch, institution, or entity through their respective clearing representative. The original and duplicate shall be shipped to or retained in Manila clearing offices as the case may be. Out-of-town demands presented in clearing center against a bank without any branch in that particular clearing area shall be delivered to the clearing officers who shall prefer a debit advice clearing from number 4-B. For the head of office of the Drawee Bank branch concerned in the Manila clearing area, in acknowledgments of receipt of out-of-town demands to duplicate of the clearing office statement and or the original of the debit advice, settling clerks respective drawees bank branches in each clearing center shall sign the shipping manifest. This clearing office statement and or the debit advice shall be served as basis for the head office in the Manila clearing area to record the result of out-town exchange in their books and on the date of receipt. Drawee Bank's branches, each clearing the center shall sign the shipping manifest. This as clearing office statement and or the debit advice shall serve as basis for the head office in Manila clearing area to the record results of town exchanges in their books on the date of receipt. B. Procedure for special clearing. Demands may be presented directly to the Drawee Bank's branch institution or entities concerned at time of the demand specified in Section 1. For this purpose, the special clearing received cash from number 10 shall be used. The original and duplicate copies of the receipt shall entity and triplicate shall be delivered to the Drawee branch of the following clearing session. The originals of the special clearing receipt shall be presented as demand against the bank branch institution for entity concerned. Nothing in this section shall prevent directly settlement between the parties concerned. C. Procedure for return items. Item which should be returned for any reason whatsoever shall be presented not later than the next regular clearing for local exchanges. Out-of-town exchanges shall be returned within period of a specific memorandum to authorize agents banks announcing the opening and clearing facilities in each of the authorized regional clearing center. Items for return shall be sealed in special red envelope and shall be considered and encountered for the debits to the demanding banks, branches, institution, or entities and credits to the returning banks, branches, institution, or entities. Nothing in the section shall present directly settlement on return items between the parties concerned. Items which have been the subject of materials alteration or items bearing a forged endorsements when such endorsement is necessary for negotiation shall be returned within 24 hours after discovery of the fear alternation or the forgery, but in no events beyond the period fixed or provided by law for filing of legal action by returning bank, branch, and institution or entity against the bank, branch, institution, or entity sending the same bank. Measures or items misdirected through clearing shall be returned of the next clearing session in special yellow envelopes and shall be accounted for as debit for the bank, branch, institution, or entity which had misdirected the items. D. Procedure for excluded members. In case any bank's branch, institution, or entity is excluded from clearing on any day on account of the tardiness or absence, value shall be given deliveries on the presence of the credit of their accounts accordance with normal setting procedure. The total of such deliveries shall be debited to the account of the excluded bank, branch, institution, or entity. The bank, branch, institution, or any excluded from clearing shall be, as heretofore, sent into present to clearing office unit to prepare the clearing statement and access delivery on it. In case of failure to send its representative, the clearing office unit shall in meantime receive such deliveries which should be picked up in the excluded bank, branch, institution, or entity not later than 5:30 p.m. at the same day. In the event of a strike or force majeure which prevents a bank, branch, institution, or entity allowed to clear from having access to its records or otherwise ascertaining whether the check's delivery to it shall be honored or return notice of such circumstances shall immediately be given to the Central Bank Clearing Office Unit. In such cases, item drawn against the bank, branch, institution, or entity concerned shall not be presented for clearing. Section 5. Loss of clearing. Any loss of damage arising from theft, pilferage, or other causes affecting items in transit shall be for the account of sending bank or entity concerned. SGD G.S. Licaros, Governor. Clearing Center Number 1, Manila. Suburban towns and cities within the clearing areas: Quezon City, Pasay City, Caloocan City, San Juan, Mandaluyong, Makati, Parañaque, Navotas, Malabon, Marikina, Pasig, Metro Manila, Gagua, Pampanga, San Fernando, Pampanga. Number 2, Angeles City, Bacolod City. Number 3, 4, Cagayan de Oro City. 5, Cebu City. 6, Dagupan City, Davao City. Number 7, Iloilo City. 9, Legazpi City. 10, Naga City. 11, San Fernando, La Union. 12, Tacloban. 13, Zamboanga City. Mandawi, Cebu. Ordaneta, Pangasinan. Daraga, Tabaco, Albay, Iriga, Camarines Sur, Baguio City, Tacloban City. This is the end of Money, Credit, and Banking Annex. Now, let's go to the part 2. From the first topic to the last topic of Annex, no, from that one, from my last topic, this is called the part 1, called money. From part 1, I discuss money and the economy, history of money, the supply of money, the importance of money, the goals of money. In Chapter 2, the Philippines Financial System, nature and necessity of finance, elements of the financial system, function and financial institution, structure of the Philippines financial system, Central Bank of the Philippines, bank institution, non-banking financial institution, financial reforms, multinational banks in the Philippines, the role of the WIBF and ADB in the Philippines financial system. Chapter 3, money, function, and kinds, money defined function of money, features of good money, kinds of money, money's currency, monetary standards, Gershom law, gold silver standard, gold silver exchange standard, different types of money used in the Philippines, central bank and security printing plant, mint and gold refinery complex, Rationale establishing the central bank, the security printing plant, and that's all the topic. Now let's go to the part 2. Part 2 of my topic. Uh, uh, like I said earlier, part 2, credit, the nature of function of credit, classification and instrument of credit, individual development through credit consciousness, the role of credit in rural development, credit for development, credit for developing countries. Uh, all my friends and viewers, I will be right back. So uh, I will take for water for a while. So I will be right back. So wait. Okay. I'm Thank you for waiting. Now let's continue to my topic. Actually, this is the last my topic, but I will try my best to add more topic to discuss about money, credit, and banking. Nature function of credit. In the various stages of economic development, not a few former underdeveloped nations have achieved higher levels of stability and growth in both economic and social endeavors. It is most evident that the credit system, among other things, has been very instrumental in the development and progress of nation. Needless to say that the rate of economic growth of a country depends on the ability of sufficient credit and course of the proper use of credit. It is not surprising, therefore, the prosperous countries such as the United States, Canada, Japan, and those in Europe, excuse me, uh, Europe, and becoming more progressive, their abundant credit supply has found more production and variability and variably this creates more employment and income for the people. Their quality of life is thus improved, and ultimately the whole society has been benefited. In contrast, the poor countries, which are the in greater need and more funds for development purposes, suffer from tremendous disadvantage. They lack capital to develop their natural resources. They need credits to lay the foundation of economic and social development like education, health, housing, transportation, communication, and technology. Their abilities to obtain credits depends naturally on their capacity to pay their debts, since most poor countries are not only deficient in their economic institution but also in the political and social institution. Their credits rating to below. Financial institutions such as the World Bank and Asian Development Bank could only grant them loans within their capacity to pay their financial obligation, and the capacity to pay is measured not only by economic consideration but also by political stability and the attitudes of the users of credit. Basically, this is chapter and the subsequent chapters on credit intend to focus the importance of credit on the development and growth of our country. This is particular chapters deals with development or of credit from the pre-Spanish time, the presence, the nature of credit, and its use and function, the user and suppliers of credit, and the advantage of the disadvantages of credit. The development of credit. The credit system reflects in many ways the degree of economic and social values and institution prevailing in particular society at a given point in time. Credit being a tool of development and progress of people and society has since ancient times to the present serves the specific and relevant needs of the economy. However, it is not a few instances in the past and the present credit has been improperly used by both individual and institutional uh, borrowers. They utilize their loans only to promote their own personal interests and welfare at the expenses of real productivity and national development. It assess contains society where its people only produce what they could consume. Credit has no place, but this type of economic society could only exist at a very primitive economic society, economic and social setting, and it is doubtful if there are still such human groups at present in any part of the world. If ever there are, it could be concluded that such societies are devoid of opportunities to develop into higher level of economic growth as long as they persist to live in a non-market economy. Societies, after passing through the process of food gathering into primitive agriculture, adapted the system of barter. They realized that it was not possible to produce all the goods that they wanted for consume. They resorted to barter to improve their economy and social life. Later on, they found out that the barter system had several shortcomings. Thus, they invented the money, no matter how crude it was at the beginning, as a medium of exchange. The introduction of money in the economy ushered in a very significant milestone in the development of the credit system. The pace of the development of countries has accelerated ever since free Spanish time. The Philippines had been trading with foreign countries such as China, Japan, Sumatra, India, Arabia, San Borneo, Japan, Moluccas, and other East Indian islands when the Spanish conqueror arrived. The barter system then was used in the Kandahar trade with the foreigners. The Filipinos exchanged their native products such as cotton, pearls, betel nuts, cinnamon, fiber, etc. within the goods of the foreigners like porcelain, silk, ivory, etc. Sige lang po, mamaya bibisit ako sa LS mo. Medyo konti na lang naman to, konti na lang yung topic ko. A good example of the positive value of Filipino trader was the manner they honor the custom of the trade. The foreign ship anchor in front of the house of the tribal chief of the village. The native traders took the goods of the foreigners and placed them in their baskets. Although some of the Filipino traders were unknown to the foreigners, they were allowed to carry the goods to remote places for exchange with indigenous products. It took them 8 to 9 months to return to the ship to pay the foreign member charge. Indeed, the business attitude of our Filipino traders is a very rare virtue, especially during this time. The reputation of Filipino traders as good debtors contributed considerably to the world of trade and commerce in the Asian region. Manila was the emporium of Oriental trade. Spanish time. During initial years of Spanish rule, free trade was encouraged. The goods of the Far East were marketed to America through Manila and through Acapulco. Mexico, Manila was still the center of trade and commerce in the Orient. Subsequently, however, Spain adopted a policy of trade restriction in line prevailing concept of mercantilism in Europe. A product of mercantilistic policy in the Philippines was the galleon trade. This was the Manila-Acapulco trade. It was called galleon trade because it was carried on by Pacific galleons. Such trade was a government monopoly. The privilege of doing business in the galleon trade went to the governor general, religious official, royal official, soldiers, and their relatives and friends. Most of those who participated in the galleon trade secured their loan from the Obras Payas. These were the foreigners of the banking institution in the Philippines. The funds of the Obras Payas was donated by rich citizens for religious projects, and these were managed by the religious order. Obviously, the credit system during the Spanish time favored only a chosen few, if only served the economic interests of the ranking official and the relatives and friends. The funds of the Obras Payas could have been used for development of the country. Government officials spent their time and resources in the galleon trade. Thus, they neglected the more important economic projects, basically rural development. Somehow, the galleon trade was blessing is disguised because of our natural resources were not exploited by the colonizer. American era. Agriculture remained undeveloped under the Spanish regime. The American government, however, gave priority to its development. The American administrator introduced a better banking and credit system to promote economic development, especially in the rural areas. Among the credit programs of the government was the organization of the first agricultural bank in 1908 for the benefits of the farmers. In 1915, the Rural Credit Law was enacted to complement the agricultural bank. The law is initiated the organization of the agricultural cooperatives, particularly credit association in every town all over the country. Shortly thereafter, the Rice and Corn Fund was established, providing 1 million for loans to the Farmers Credit Cooperative. The banking system grew up, but it was dominated by foreign interests. Only Filipino-owned banks, which were founded where meager resources served the credit needs of the rural area. To remedy such shortcomings in the credit system, the Philippines National Bank was established in 1960s. It extended long-term loans to agriculture and industry. Subsequently, programs were undertaken to improve the credit system. The organization of rural banks and agricultural credit associations were encouraged by the government. However, only of 7 credit associations and 2 rural banks were actually organized, and all of them were short-lived. Unfortunately, the the credit program of the government failed in the rural areas. Farmers did not pay their financial obligation. The failure of the credit program was caused by combination of several factors. Number one, farmers did not have a steady income due to the destruction of their crops by natural calamities. Two, they were exploited by the landlords by giving them unfair share in the harvest, that it was not really possible for them to pay their loans. Three, the negative attitudes of the borrower towards their debts influence their refusal to settle their financial obligation. Four, the consider loans as another form of uh, dole-outs, and therefore they did not feel responsibility of paying the government lending institution. Under the Republic, uh, the scars of World War II were still conspicuous when the Philippines became a republic on July 4, 1946. It was a period of reconstruction and rehabilitation. The national economic and the people greatly needed money for business of the country. The Rehabilitation Finance Corporation was established on October 29, 1946. It's provided credit facility for the rehabilitation of agriculture, commerce, and industry. It also assisted in the reconstruction of poor damaged property. In 1958, the Rehabilitation Finance Corporation became the development bank of the Philippines. In very significant improvement in the financial system was the establishment of the Central Bank of the Philippines in 1949. Since then, monetary policy have been fashioned to improve production, improvement the quality of life of the people, especially in the rural sector where poverty has been more widespread, to hasten economic progress with emphasis on rural development. Credit facilities were brought closer to those who greatly needed them, such as the small farmers, small producer, and small merchant in the rural areas. Thus, in 1952, the Agricultural Credit and Cooperative Finance Administration, which later became Agricultural Credit Administration, whose function had been taken over by the Land Bank in 1982, and rural banks were established for the benefits of the farmers and other lower income groups in rural areas. In later years, the government encouraged the organization of savings and loans association. This was to promote the habits of thrift among the people, to expand credit facilities for the poor. At present, government has channeled a major portion of its financial resources for development of the country. Aside from the rural banks' needs of the farmers, other the rural area, likewise, cooperative rural banks have been organized under the supervision of the Bureau, Agricultural Cooperatives Development, Department of Agriculture and Food. These cooperative banks are owned by the farmers themselves. Basic concept of credit. Credit. It has several meanings to different groups or disciplines. Its connotation may vary. For instance, in accounting, balance of payments, in international trade, or in economics. However, in this chapter and the other chapters on credit, the meaning of credit is limited within the context of development economics. The word credit came from the Latin creditum, which means trust. Credit refers to the ability to acquire something of value, such as goods, services, securities, or money at the present time in return for a promise to pay at some future time. In like manner, payment which has been promised may take the form of goods, services, securities, or money. There are two parties involved in any credit transaction: the creditors who provides the thing, borrow, and the debtor who receive and assume the obligation to pay. May shout out to Blooming Hummingbird. Thank you for coming. Good morning. Oh, now let's continue. Moreover, a credit transaction usually involves either a promise or order to pay a definite sum of money in the field of banking and allied institution. It is obvious, therefore, that the most important and biggest credit transaction are those which involve the use of money. I will check kung meron ka ng yan. May, sige, binigyan na kita ng jacket, blooming, hummingbird. Okay, let's continue. Moreover, a credit transaction usually involve either a promise or order to pay a definite sum of money in the field of banking and allied institution. It is obvious, therefore, that the most important and biggest credit transactions are those which involve the use of money. Whenever debt is mentioned, it also means credit debt and credit are simply the same thing taken from two different points of view. Both are obligation to pay in the future. Since money is generally used as standard of different payments, said obligations to pay in the future refers to the fixed sum of money. The obligation is called credit. It refers to a person or institution to whom the future payment is to be made, and to the obligation of debt, it refers to the person or institution who is obliged to pay in the future. Credit instrument. The paper which contain in writing the obligation of the debtor and the right of the creditor is credit instrument. There are, however, credit contracts which are just based on oral agreement, and these are legally binding on both parties as a matter of trust. In this particular case, there is no credit instrument. Nevertheless, certain types of credit contract must be in writing in accordance with the requirements of the law. Credit instrument may be differs depending on the purpose of custom and laws of the government. Credit system. These include credit instruments, credit institution law, and custom on credit lending and collection. A more dynamic and relevant credit system aims to maximize the use of the productive resources of the economy and to distribute fairly the fruits of production among the members of society. This is speed of economic growth of the country. It does not always follow, however, that the national economic growth reflects the real improvement in the welfare of the people. It is possible that the credit system can make the rich richer. For instance, if it is only the sugar barons, the big coconut planters, and the business tycoon who can easily avail themselves of the credit facilities and of the financial institution. Then credit fund which are generally scarce are not properly allocated. It is even worse. It is the foreign business who get more benefits from our own banking institution. A good credit system. should be responsive to the needs and welfare of the poor, who constitutes a great majority of our population. A government program which benefits the poorest of the poor is an excellent program. Economic progress would be only real when the fruits of development improve the quality of life of the poor. Elements of credit. Thus, our modern economy function on credit. This implies that the creditors of bank or banker has faith in the ability and willingness of the debtor to fulfill his obligation, be it an individual, corporation, or government. Time of payment. The borrower has been obligation to pay his debt is a definite time or date. A certain fixed date is agreed upon for him to pay as promise. Praise life is full of praise, and this includes the payment of loans, the ability of the borrower to fulfill his promise to pay may be reduced by circumstances beyond his control, such as natural calamities and personal misfortune. Misfortune. Basis of credit. Character. This refers to the personal integrity of the borrower. His determination to pay can be judged by his past business record, such as reputation for honest dealings or its business losses. Character of the borrowers include personal habits, attitudes, and activities like vices, style of living, social and political association, and the like. Basically, all borrowers must possess good characters. This essential requirement holds not only for individual but also for business and nation as well. Capacity. This can be measured by managerial ability of the borrower, that is the ability to use wisely and efficiently this loan. Factors such as responsibility, maturity, and business competence of the borrower determine his capacity to pay. Capital. This refers to the resources owned by his borrower such as properties, aside from the faith of the lender and the character and capacity of the borrower. The ability of the latter to pay has been secured by his pledge of his property. Nevertheless, whether such property are pledged or is not, the ability of the borrower to acquire credit has been improved. Collateral. Usually, the title of a land is required as a security for a loan. These serve as safety measure for the payments of loan. Thus, the lender has no worry in case the borrower the borrower fails to comply with his financial obligation. In other cases, building machine, commodities, and other valuable properties can be used as collateral. Condition. They are the other factor which affect the ability of borrowers to pay their financial obligation. These are the conditions affecting the geographical location, the enterprise, and the general economy. Geographical consideration influence the ability to pay of the borrowers. In place where there is no peace and other business operation are adversely affected, naturally the economic viability of the business of the debtor is likewise affected. This is the reason why bankers are reluctant to extend credit the regions where there are political and social disorder. In the case of the enterprise of the borrower is the nature and condition, the ability to pay the owner. It is not profitable business venture or it is a declining economic performance, then the trust of the lender is likely unfavorable. In the same manner, there are conditions which are disadvantages to both lenders and borrowers. These are the economic problems such as inflation, unemployment, inefficient monetary policies, and other depressive business trends. In times of economic difficulties, debtors find it hard to comply with the financial obligation. This means the merchants of credit do not only suffer from problems in credit collection, but also it will be the poor business for them. Sources of credit information. Safety of the loans is the primary consideration of lending institutions. Creditors want to be sure that their money will be repaid. It is necessary for them to maintain reliable information of etc. of their loan applicants with such information it is possible for the people with proper credit of borrower banks have their own credit department which screen loan applicants. They conduct credit investigation to determine the abilities to pay of borrowers. However, in the case of a small consumer loan, credit investigation is discounted because it explains the bank relies not only on the information supplied by the applicants themselves, here are the sources of credit information. Internal records. These are the data which are the files of the bank. Credit customer records are indicated in the file in case the loan applicant has previously borrowed from the bank. This bank's record can be used for references. For instance, his records show the amount of he borrowed, the interest he paid, the collateral, his pledge, etc. It is also reflected in his file whether he paid his loan promptly or that he incurred some uh, arrears. Applicant's information. The best source of information, the applicant himself, more than anyone else, he knows well his business affairs and ability to pay his loan. Important data about the fitness of the applicant can be obtained through personal interview, direct investigation, mail questionnaires, and analysis of financial statement of the business of the applicant. In case of his financial record appears doubtful, this could be verified. Business references. Upon request, financial institution give information among themselves regarding the credit standing of all applicants. A bank can check from other banks the credit records of loan applicants. Likewise, business are usually cooperative in supplying lending institution. Credit information about their customer, for example, commercial banks, total loan applicants, to give the names of the companies where they buy their production input. They call up the said companies to check the manner of business dealing with them. CB Credit's information system. The central banks of the Philippines provide credit information to banks except rural banks. So obtain information about their applicants. However, the central bank will not release credit information to inquire institution without the consent of the subject. Another condition, financial institutions which are not up to date in submitting their reports on credit and equity exposure to the central bank will not be entitled to obtain information from the CV credit information system. To ensure confidentiality, the CB assigns a reference number of each inquiry. The reply format indicates the inquiry number but not the same of the subject. Financial intermediaries and government institutions, agencies, and corporations that is subject of inquiry. The information to be given includes number one, list of financial institutions to which the subject has outstanding obligation. Two, aggregate amount of the outstanding obligation classified into current and or past due. These are broken down into loans, commercial papers, letters of credit, etc. Other sources, business magazines, trade journals, government business report, and the business section of the newspaper are used by financial institutions to supplement their credit information. Such sources indicate which in the industry are improving or losing credit. Department of Banks file newspaper clippings or pending lawsuit, bankruptcy proceeding, and the like, the future references. This may be served as a source of information regarding the business background of their customer. Users of credit, consumer. Many people borrow money, especially the poor, for the expenses of essential goods and services like food, shelter, health, and education. In times of emergencies such as accident, death, and other calamities, the poor resort to credit fund. Their existing financial resources are not enough to defray, therefore, unexpected financial needs. The role of credit has been more extensive under the present modern market economy. Installment buying has gained widespread acceptance by the low income groups of our society. A few consumers acquire their residential houses, cars, appliances, and other consumer goods through installment. Businessmen, most businessmen, not all investments through they borrow money from financial institutions, purchase machine, construct buildings, and other fixed factors of production. Marketing people use credit to buy trucks, storage facilities, and other capital goods. Even the lowly market vendors depend on credit, most likely from usurer, to finance their buy and sell business. Government, poor and developing lack of sufficient funds to finance their numerous development programs, their income from taxes and their internal credit are not enough to implement their economic and social projects. So they borrow from their rich countries like the United States, Germany, and Canada. They also borrow from financial institutions such as the World Bank, Asian Development Bank, and International Monetary Fund. Suppliers of credit, bank. The banking system provides the loans to individual firms and government. The commercial banks can easily expand money supply in the economy by lending the money of the depositor. This process of lending, this process of creating money by banking system is explained in other chapter. Credit cooperative. This credit association grant loans to their members for the productive and providential purposes. Usually, the members of credit cooperatives belong, excuse me, to the poor and middle income groups. Pawn shop, many financial problems with students, poor housewives, and small employees are saved or reduced by pawn shop. Borrowers offer their valuable goods such as rings, watches, and other jewelry as collateral for their small loan. Unlicensed money lenders. This type of creditors have become very popular since the ancient times to the present. They are found in all places. Their credit scheme has been illegal, but it's remained until now a very lucrative business because of their high cost of credit. They earn the reputation of loan shark, although usually is being caused by society. The poor who desperately need money have no recourse except the victims of the loan shark. Institution. Several other financial institutions which supplies credit such as investment and financing companies, savings and loan, association, insurance company, GSIS, SSS. Functions of credit. Economic prosperity for all members of society is the natural aspiration of any economic or political system in the hierarchy of human needs. The satisfaction of the physical needs comes first, such as food, clothing, and shelter. The next step is for man to go to work for the higher needs, such as security status and fulfillment. Obviously, money assumes a very vital role in a man's inherent inclination to improve himself, his society, and his institution. Money is used to sustain our basic needs, promote production, trade, and industry. Moreover, money is used to finance the economic and social programs and projects of the government. However, it is not possible to satisfy all human wants. At the same time, human wants are unlimited while unavailable resources are limited. As a realistic solutions to such economic problem, priorities are established. This means the more essential needs are given the first priority, like food and housing. Human as we are, however, we intend to be more creative and enterprising. We feel that there are other ways aside from complete dissatisfaction in the consumption of goods and services. One of these, of course, is through credit. Borrowed funds can generate more production, employment, and income of the economy, and improve the economic condition of the people. Consequently, their social standard is elevated. Here are the two major functions of credit. Shout out to Reggie Guzman. Economic function. To credit, more goods and services are acquired. For example, more food, clothing, houses, machine, medical care, education, etc., can be purchased through credit. Nevertheless, some groups who increase their presence and consumption through credit would mean a lesser consumption in the future. They will pay their debts in the future, and this will reduce their disposable income. However, the effects of more consumption in the economy and more consumption stimulate more investment, and the multiplier and accelerator effects of the economy would be tremendous. It results in more production, employment, and income as the whole national economy is benefited, including the government and the people. To illustrate the supposing a business borrows several millions of pesos from the Philippines National Bank for supermarket business, the construction of the supermarket building are benefited, like the engineer, the architect, the carpenter, the mason, and the unskilled laborer. In addition, the suppliers of the materials of the building are favorably affected when the supermarket start operating in higher. Many people, such supervisor and sales staff, this is only a project, but its effect of people and the economy are numerous in terms of decades. Social function. People enhance their social standing through their economic resources such as money, land, cars, houses, and other prestigious properties. They work hard not only to attain their economic ambition but also to gain higher social status. They like to be respected and admired by their peers, relative friends, and other members of society. In fact, many are willing to sacrifice in order to pay the price of social respectability. Through the credit, the determinants of social status can be acquired, such as modern appliances, big houses, foreign travelers, travel education, and other symbols of wealth. The study now pay later program provides great opportunity for the poor students to climb the social ladder. Thus, it serves as a form of a social equalizer. The poor can improve their economic condition by using credit. This applies to poor nation as well. They too can become progressive by properly developing their economy through credit funds. Advantages of a credit economy. Number one, it's more convenient, economical, and effective type of money. Precious metals like gold and silver are expensive media of exchange. Credit money can be more flexible in its supply to meet the needs of the economy. Two, permits the business firms to make liquid or spendable and liquid wealth. Its capital goods such as plants, machineries, and factories can be used in security for borrowing. It can sell bonds to finance further its operation instead of selling part of the plans to acquire money for the raw materials. Three, it's become easier for dynamic enterprise men to enter into business credit. They could organize their own firms. Four, provide security and more income to wage earners. They save a part of their income in the hope of getting more money during their declining years or in case they would be out of job. Five, government projects can be financed through bonds and loans. Six, in accelerate production, employment, income, consumption, etc. Seven, lastly, it allows consumers to enjoy the consumption of goods and services sooner, like house and appliances and other things. Disadvantages of credit economy. Number one, heavy borrowings by the government may lead to inflation. It requires competent monetary authorities and the cooperation of other major sectors of the government to use properly the credit funds so as not to destroy monetary stability. Number two, borrowing by the government may likely lead to extravagance and inefficiency with the observation of development economies on the performance of the poor countries regarding the application of their loans. Three, goods would be possessed in case of failure to fulfill promise to pay. Borrowers who do not pay their loans of the bank, or the ability to fulfill the financial obligation may be difficult at the time when payment is due. The debtor may not have cash or some liquid asset. 5. Business error in the application of credit funds had chain effect on the whole economy. The failure of some firms to settle their debts affect financial position of other company. The latter may not able to meet their promises to pay it. Many business firms are involved. Many of them could not pay their bank's loan. In turn, the banks could not pay their depositors. Excessive loan from other countries, maybe the government may likely be burdened to the future generation unless these are wisely invested in the economy. Number 7, in some cases, credit reduces the future consumption of debtors. This is the end of my topic of titled The Nature and Function of Credit. Now let's go to our question for review and discussion. 1. Explain credit practice during pre-Spanish time. 2. What is the guardian tree? A blessing is disguised to our natural resources. 3. What are obras pias? 4. What are the credit programs of the American era? 5. Give the causes of the failure of the credit program before World War II. 6. Explain the nature of the credit program immediately after the war. 7. Define credit instrument, and credit system. 8. What is an ideal credit system? 9. Explain the elements of credit. 10. What are the bases of credit? Which is the most important basis? Why? Okay. Question number 10. There are three questions in number 10. What are the bases of credit? That is first question. Which is the most important basis? That is the second question. And 3, why? That is question number 10. All right. 11, where do you get information on the credit worthiness of borrowers? Last question. Explain some advantages and disadvantages of credit. You can answer this in your paper or you can comment in our comment section box, even in live stream or not. This is the end of my topic. I will continue this my topic in the afternoon. So come and join us. And don't forget, number 1 is don't forget to watch my full video. Number 2, don't forget to click like. Number 3, don't forget to click subscribe. Number 4, comment based on my topic in my video. Number 5, don't forget to click all bell. This is the end of my topic. God bless you all. More blessings to come. and more power. Uh, don't don't forget the LS to Marisiga at 8:30 in this. To all my friends and viewers, small YouTuber, please visit Juan Marsiga. God bless you all.